Hi, this is the weekly recap. Today is Sunday the 27th, so this is for the week coming, so end of October, early November. And we start with the December regular position. I do have the closing prices from IB, so this is a fairly accurate picture, and as you can see, the December trade is quite safe, trying to cover all the way down to the shorts, which incidentally are exactly on the very strong support level. And for other support levels, please check the other video on the SPX market outlook, and you will see that we have a series of support here. In any case, the market is likely to go test all-time highs again and maybe push all the way to the 30.50. So the trade is safe on the upside. Really, unlike the RTT, there's no rush to pull the upper longs in, and I mean delta is flattish. We don't have much Vega pressure, and this is not, I mean, even though sometimes we do mutate the Rhino into RTT style, we keep a negative delta and we try and keep some theta. So the trade is more at the money than a RTT that will through what is called reverse Harveys, pulling back the upper longs. The position tends to be more and more bearish. Um, so this trade is okay. There's really not much to do. We did little to it over the week, basically, and it was also some kind of a simplification. That was on Friday, so if I ignore this, this is what we had before. I just pulled three longs here in the PCS 2875, 2900, and I could have done it without controlling capital to some extent, because I actually pushed two low longs up one notch to 2800. So it was an unbalanced short condor, allowing a little bit more capital usage, but also controlling delta. I wouldn't have gone, or maybe I could have gone for just one or two PCSs here without capital control. That is also something possible. And I decided that a simpler trade, should anything happen, will be easier to handle. So now we have, what, 6 strikes, so it's easy to work with. And we have ample capital on the side, considering that November has been closed. So even if the market was to drop rapidly, and this is very, very unlikely, I would probably try and protect profits by acting as soon as delta goes flattish to slightly positive. So probably more conservatively than normally the lowest shorts. So basically no much risk on the downside, no need for an extra hedge. And on the upside, as you can see, I've lifted the upper expression line to something around 850. So 850, 860. So it's actually pretty good, and it shouldn't take much management in the coming week. There's still a long way to go, 56 DTE as of Friday. So unless the market keeps congesting in this area, maybe giving us some motivation to add an extra layer by way of another localized, maybe, something like a shorter wing broken butterfly for, you see, this one would cost probably nothing, and that would give us about 30% more theta. Delta would stay the same. There's no much change on gamma, although gamma is not an issue at this stage. We would lose a bit of cover here, but it's not a parity right now, and we would also have about 40% more Vega. So in terms of capacity to handle a downward move, it wouldn't be as good. I mean, generally, when volatility drops, again, even though this is not part of the rules, I'd like to keep delta to Vega in around 10%. So it's already low at around 5%, so there's no real need to do more than that. Another possibility is, of course, not to go localized and go for a kind of a wide IC, and I would probably put a, since we do have time premium here, we'd probably add some shorts here and balance it out with an IC somewhere around 1 SD. This is quite safe over there. It doesn't bring much. We would get about 4 delta here. So there's a possibility of doing something like this. As you can see, $4,000 more. Um, delta would be a little bit too strong. So not that it is a major problem as long as it keeps to 30.50. So that's something that could be done. Delta would be strong because of the extra Vega. I mean, but minus 10 is still absolutely fine. But just in case of a reversal, I would tweak it a bit differently. Again, this is not part of the rules. It's more the layer management in the Rhino. A long talk for really a trade that probably doesn't need anything. The BTB and I went the easiest way by just applying the same type of adjustment. So this one is also doing fine, no upside risk. It's just a little bit, about 650. It doesn't bring as much on the upside. It's lagging behind a bit. So maybe this one would require a tiny bit more management. And considering that there are no possible layers in the standard Rhino, it would probably be something like pulling back one up along. That would not help on the theta, but that's something we can do. In the original Rhino, we don't really care much about the delta Vega ratio. So that's something that can be done. And of course, this is to be done according to your market expectation and risk profile. So that's it for that one. Okay, bit of an interruption. My option Net Explorer crashed. I moved back to Monday. This is when I actually closed the November trades. And so this is where actually, as you can remember from the last weekly recap, I started peeling off because we were close to the 2,000 target on the previous Friday. And so on Monday, 2050 TE, I decided, okay, the target for the week will be 1500 by 21st, by 21 DT, so by that Friday. I could see the market was still, pushing a bit higher or at least grinding higher. So there was then a possibility, if you remember, just to tweak and de-risk the trade completely. I refer to a screenshot I sent on Slack. Of course, it is also possible to keep the trade longer and, for example, doing this. But, you tend to go a little bit more delta positive, and this is when you get to this final stage. You should actually display more strikes and do more micromanagement. Considering I've got a lot of work on my SOAP program, you must have realized that in the last 2 to 3 months, I've kept management as simple as possible. I basically followed the rules that I would, since I missed the target on the previous Friday, I would just close the trade. So I closed it, and let's have a look first at the regular trade, which, like December, was lacking a little bit behind, but still doing fine. I mean, we closed the trades for about 6 to 7%, or 7 to 7.5%. So there was not much due there. Let's have a look at the trade reports on SPX. I closed for about 1900 the regular trade, and BTB wasn't far behind at 1765. So pretty good month. Pretty good month. I mean, this end of the year is looking pretty good. I won't have much time for the baby Rhino. This is how the new one looks. As you can see, with the market pushing a bit, it's not exactly. I mean, it's fairly easy to manage, but it is a theta trade. Vega's a bit strong, but theta on the calendars should also compensate for it to some extent. There's no real crash with delta going massively negative, so it's actually okay for now. And we have projection shows that 1 SD covers the peaks, So that should be okay. And as you can see, if we were not to do anything, there's actually profit on the downside and not so much. We always try and keep the profit range, the T+7 profit range, fairly balanced. That's why I balanced out with some PCS here, and maybe more will have to be done on Monday. So there are not many baby rhino traders, and for that I suggest you contact me directly on Slack and we can discuss the various setups and the way to manage it properly. Okay, that's it for now. I wish you a lovely weekend, and I'll see you tomorrow on Slack. To sum it up, really, not much to do this week, which is pretty good. Okay, bye for now.